Doug, thank you. It's good to finally connect with you and talk with you. I want to get your take. You get WTI around 60, Brent around 70. How do you stay disciplined?
Thanks, Alex. I appreciate the opportunity to be here. I think that what's been emerging even before COVID and the Russian-Saudi price war was the emergence of a new business model in the sector, particularly for the independent E&P companies, which have been driving a lot of the growth. And of course, that model is really built on generating free cash, returning cash to shareholders. And then the growth really needs to equate to what's going on in the macro market. And clearly today, the world's still rebalancing and doesn't need it. So I'm confident this discipline will remain. I think the signals from the market have reinforced that. And I don't expect you to see growth really to come into the equation until global demand signals for it.
And the market really did talk. You had a confrontation, battle, agreement with the activist investor, Ben Dell of Kimmeridge. You have two new people on the board. And since Meg Gentle of Tellurian of natural gas LNG export fame came on your board, the stock is up 75%. If you are successful at sort of paying down debt, selling the assets that you have to, how do you not then pump more money into shale production if you get everything else under control?
Well, Alex, it's probably worth highlighting that we went to this new model 3 years ago. In fact, for 3 consecutive years, we've generated free cash. Clearly for us, what shifted off the back of COVID was pushing the priority to the balance sheet today. And that's what we announced back in May. Shareholders responded quite strongly to that action. We recently upped those targets and brought them forward. And we've said until we get there and until we see a global demand signal, what we really need to do is maintain our scale and generate free cash, actually substantial free cash, and push that into reducing debt.
Doug, good morning. It's Guy. If you were a private company right now, do you think you'd be looking to drill more? Do you think you'd be looking to pump more? Is that what you think CEOs of private companies will be thinking about right now, given the rapid rise that we've seen in prices?
Guy, it's a great question, but I think you have to differentiate small companies from larger companies. If you're a small company and you're trying to bring in investors, whether that's private or through the public markets, in many cases, you really only offer is growth. Now, these are small companies, so they really can't shift the supply-demand balance very much. It's the bigger companies, the larger independents, and obviously the majors and the NOCs, which can affect that. And I think you are seeing some of what you're talking about. If you look at rig counts, for instance, we've seen a stronger growth from the private operators than the public companies. But I think we just have to remember, these are relatively small firms, and in many cases, that really is their only offer to investors. I don't think it's going to drive the macro. I think the larger independents and the majors are going to hold that discipline and wait to see the market signal that more production is required.
Doug, I'm just curious, as you sort of unveiled this new plan since May, what are your conversations like with your activist investor, Kimmeridge?
Well, our conversations with Kimmeridge, and they're a little unique because they had published a series of white papers around things which they thought the industry needed to do to bring the generalist investor back. And if you look at those papers and compare that to what we've done, there's a great deal of alignment. And in fact, much of the difference was only in degrees, so it was quite small. And recently, you probably saw that we came to an agreement to put one of their nominees on our board. And then, of course, they've said they're very comfortable with what the company's doing and where we're headed. In particular, they like the fact that we not only gave a year-end 21 debt target, but actually talked about where we were targeting our debt to get to. And we announced actually just recently that we would achieve that using a $50 oil price by the end of 22. So obviously at today's prices, much sooner.
Okay, let's pick up there because that's exactly where I wanted to go. So 50, you're doing, I think it was just, in free cash flow, I think it was just less than $1 billion. I think it's 900 and something. How much higher is that number at 65? How much have you sold forward, Doug? I guess is going to be one of the big kind of points of interest there.
Yeah, one of the things we think is a key ingredient to be successful in this industry is risk management, because as we all know, and we routinely get to learn this lesson, we don't control the price of a product. So we need to actually be prepared for the volatility in the product. And we do that in a number of ways. One of that's hedging. We also do it with the flexibility we build into our capital program and other things that allows us to move quickly, to be very agile when required. With respect to hedging, we've always believed we needed to protect a certain portion of our balance sheet against low prices, but we were also optimistic and confident that prices were going to recover. So we have hedged somewhere over 60% of our oil for 2021, but we've typically used what's called a three-way structure, which gives us a soft floor we were comfortable with, but gives us upside, where many people actually use what's called a fixed price swap. We've tended to not use those in this environment because we wanted access to the upside, because just as you pointed out, that upside could be significant and it would accelerate our debt reduction.
Doug, before we let you go, I've spoken to Chevron yesterday, Exxon last week, and they're all unveiling sort of how they're going to tackle emissions, particularly scope 1, 2, and 3. Diamondback, sort of in your field of US E&Ps, has also announced some plans to do that. Have you looked at, and where are you in that conversation of whether or not you can get to net zero on the scope 1 and 2 emissions?
Yeah, Alex, this space is moving quickly, and I'm really pleased with what I see going on in the industry here. First and foremost, the world needs our products. Demand is actually returning today. All the forecasts, I think you referenced earlier, the short-term forecast by the EIA has actually demand exceeding 100 million barrels a day in early 22. And so what our industry first and foremost needs to focus in on is reducing the emissions from our operations, from the process of developing and producing this oil and gas. And that's our primary focus today. We recently announced a methane intensity target reduction that's tied to every employee in the company's compensation. And in addition, this whole piece about transparency is critical. We've actually published a sustainability report for 16 consecutive years. We actually report scope 1 and scope 2 emissions, have done that for a long time. And of course, I think what we're all trying to do is figure out how do we reduce the GHG intensity of our operations. And that's first and foremost, particularly while the world's consuming 100 million barrels a day.
There are kind of two ways that U.S. companies seem to be doing it. One is, as you're kind of describing, an Exxon Chevron, where they just keep on producing oil, but they're trying to do it differently and reduce their own emissions. The other is really Occidental, that at some point in the next 10 to 15 years, they want to become a carbon capture company where they can get carbon out of air, and so that's what they're going to be doing. Where do you fall in that spectrum?
Yeah, today we're very focused on reducing our emissions and our emission intensity. Things like carbon capture, even hydrogen, still have major technical hurdles to get over, so that they're both actually feasible and economic and affordable. And as those things develop, if it's appropriate, we move there, we'll go there. But today, I think our focus has to be on reducing the emissions from the oil and the natural gas that we produce.